Hello and welcome to Asian Insider. I'm Ravi Velloor, and my guest today is Mr. Thilan Wickramasinghe, Head of Research for Maybank Securities and one of the most thoughtful people on the interplay of geopolitics, the macroeconomy, and individual stocks. Thilan and I are meeting on the 7th of April, while the Iran war has just entered its second month. And as we record this podcast, the United States seems to have run out of options. Tehran is holding firm, and across Israel, there are anti-war protests. Regardless of what happens in Tel Aviv, Tehran, or Washington, Asia is seizing up. Pump prices are going up, airline ticket prices are soaring, and in many countries, restaurants are not getting cooking gas. And 9 in 10 stocks that I follow have taken a beating. What lies ahead for Asia's macroeconomic picture? And what should investors, big or small, keep in mind as they face up to this uncertain situation? These are the questions I have for Thilan. And so welcome to Asian Insider, Thilan.
Thanks for having me on.
Thilan, what a time that we're all going through. When the year started, what was on your mind? And how much have things changed in these last month and a half?
Sure, Ravi. Since the Oscars were very recent, let me take an analogy from there. I think when the year started, we were expecting the markets to really be the Michelle Yeoh of markets. Everything, everywhere, all at once. So all asset classes really performing really well in 2026.
But I think Michelle Yeoh, if I may interrupt.
So her Oscar-winning movie was called Everything, Everywhere, All at Once. But I think what we're actually turning out to have is the Leonardo DiCaprio of markets.
Okay.
One battle after another, which was also his Oscar-winning movie.
Right.
Very much more resilience-driven and constraint-aware. So I think, when you started the year, the expectations were for a easing cycle, US dollar coming off, and emerging markets actually starting to see a lot more flows, and oil was really an afterthought. But now, energy is the primary macro driver, right? And that's a huge shift when you really think about it, because no one ever thought of energy, at least in the last 20 years, as a macro driver at all. In fact, if you look at back in 2008, 16% of the S&P's market cap was energy.
Right.
Now it's under 2.5%. So everyone had thought that we've solved the energy issue. And now we're back to looking at energy as a primary. And secondly, King Dollar is making a return. We had made this assumption in the last few years that the dollar is going to reduce in importance. You're going to have dollar debasement. But I think what we're now going back to is a higher for longer scenario in terms of interest rates and more safe haven flows coming into the dollar. So, what a difference 2 months make, but, we're in a very different place.
Right. How would you describe your current mood? If I were to ask you, what are your top 3 concerns? What would they be?
Yeah, I think, we started the year very much more optimistically than we are here today. I think in markets, optimism, pessimism are all, opportunities. So I think we need to look at it that way. But I think there are 3 major concerns that I'm thinking of. Number 1 is stagflation.
Stagflation.
Yeah. So, I think we are in this situation where if oil prices continue to remain high, and that will have transmission across into inflation, across food, across energy, across transportation, and multiple other sectors. And every single oil shock since the 1970s has ended up in a recession, or actually made a recession worse. So we're going to have high inflation, we're going to potentially have high inflation and low growth. So that's one of my biggest concerns going into the next few months. The second is food security. So if you look at oil, we in a way eat oil. because it goes into fertilizer, it goes into the transportation, it goes into the supply chains. And if oil prices continue to go up and also supply chains gets disrupted, we're going to have very high food prices. And this is getting compounded by the fact that this is an El Nino year. So during El Nino years, you normally have above average rainfall or droughts in the major food producing regions. So that's
especially around the equator.
Around the equator.
In the intertropical convergence, as they call it.
Exactly. So that's going to have additional compounding effects. So that's going to drive food security issues. And then finally, I think it's the limited shock absorption capacity of governments. I think if you look at the G7 countries, when they faced the first 1970s oil shock, they had about 20% debt to GDP. Today, they're at over 100%. So that reduces the toolboxes that they have to respond to a crisis like this. So I think so some key concerns as we go into the rest of the year.
Some people are calling the all but closure of the Straits of Hormuz as the biggest oil supply shock the world has known. And as we know, most of the oil that comes through those straits are headed in our direction in Asia. How big is that setback?
I think, at least in the short term, until the markets adjust, I think it is pretty significant. I think it's not just about oil. I know the focus tends to be on oil, but the Middle East actually is a key supplier of multiple commodities to Asia. So the things like urea for fertilizer, sulfur for mining, methanol, which actually goes into biodiesel, helium, which actually goes into semiconductors. Yeah. So multiple ingredients coming out of the Middle East. So I think that's going to have a significant impact. Now the impacts will be different depending on the countries and how their economies are structured. So countries like the Philippines and Vietnam depend around 95% to 88% of their total energy imports, oil imports from the Straits of Hormuz. So they are going to be significantly impacted from an inflation point of view. There's also diesel dependencies for countries like Singapore, Indonesia, Malaysia, but they're not as big. Now, there's also dependencies on gas, where countries like Singapore, Vietnam, Thailand depend quite a bit on Middle Eastern gas. And also don't forget that there are some key agricultural economies within our region, like Thailand, and also Indonesia, where, as I said, ingredients like nitrogen, sulfur, urea will have an impact. And finally, I think, some of the key impacts will be for Singapore and Thailand, which are large petrochemical manufacturing hubs, and that contributes about 2% of GDP each for these countries.
Correct.
So that's going to have impact as well.
But I suppose there's also the impact countries like the Philippines would have with remittances if they get affected because of what's happening in the Gulf, and pharmaceuticals as well, because some of those ingredients come from the petrochemical industry.
Absolutely, and don't forget tourism as well.
Absolutely,
because there's if you take Thailand, 20% of their arrivals arrive from the Middle Eastern hubs. So that's going to have an impact as well.
Right. You mentioned this briefly, and I read this morning Ruchir Sharma also reflecting something like that in his column in the Financial Times, that this crisis is different because the world has never entered a crisis when debt and deficit levels are both so high. But would you say that one of the points in favor of this region is that since the 1997-1999 Asian economic flu, most significant economies have got their macroeconomics fairly all right. Would you agree? Is that something you'd think is a fair statement?
Absolutely. And I think if you look at across the ASEAN economies, there are echoes of the Asian crisis inbuilt into how fiscal decisions are being made. There are there are breaks that are put in terms of deficits for Indonesia, for instance. You see fairly prudent macroeconomic management in countries like Malaysia, even Thailand, despite multiple crises, have generally had pretty reasonable macroeconomic management. And I think a lot of that, as you quite rightly say, is echoes of that 1997 Asian crisis. So I think if there is any region in the world that is entering this crisis from a slightly better relative position of strength, it is probably Southeast Asia. And it's got quite a few things going for it. I mean, I think you have countries like Malaysia, which are net energy exporters in a way. That puts them in a good position. Singapore is entering this crisis with massive fiscal surpluses that they can deploy. Plus, you've got and Singapore has demonstrated from the past few years that every time the going gets very, very rough, the government does come in with pretty significant ammunition. And we have seen countries like Indonesia also making very quick sort of adjustments in terms of responding to this crisis. Even things like sacred government initiatives like the school meal programs were adjusted very quickly to address this. So I think if there is one region in the world that is probably in a slightly better shape, it is Southeast Asia.
Right. But then not all Southeast Asian countries are equal.
Yes.
Some of them are more vulnerable than the rest. And you mentioned two vulnerabilities, Vietnam and the Philippines when it comes to. What other countries do you think could be exposed?
I mean, I think Indonesia also is relatively exposed, given the fact that where deficits are and in terms of the overall import bill that they still have to depend on in terms of energy and things like that. As I said, significantly key ingredients like sulfur, which is very, very important for the mining industry, come from the Middle East. So that is something that we need to watch out for.
Right.
So.
Right. Any other major Asian economies that you think we should keep an eye on? I wrote a column 2 weeks ago saying that for India and Indonesia, it might be time to say brace, brace, brace.
Yeah, I mean, I think there's few. So I think Japan, for instance, where 90% of the energy, or more than 90% of the energy, comes through the Straits of Hormuz. So I think that's going to have a significant impact, and that's not something that you can diversify away very quickly for an economy the size of Japan. South Korea as well, which imports about 70% of their crude from the Middle East. So again, and you've got a significant manufacturing sector with a lot of hope built onto the semiconductor sector, particularly with in this whole AI cycle. So that's something to watch out for. India, very highly dependent, as you said, on Middle Eastern oil, LNG. You've got domestic issues in terms of high inflation, fiscal strain, and then we've seen energy shortages there. So quite a bit of domestic, vulnerabilities that India has to kind of deal with. And then finally, China. I mean, I think China is the largest energy importer and one of the largest dependents of the global supply chains working smoothly. I think China has benefited from that more than anyone else over the last few decades. So I think China is exposed. And I think especially at a time when the government is trying to revive the economy and try to, get things revving up, especially with disinflation and so on. But I think out of the large Asian economies, China is probably still one of the better position from the fact that they have better energy independence. 60% of their electricity comes from renewable sources, and they're rapidly electrifying their domestic transportation sector. So China has a little bit more, and they've got large fiscal reserves.
They have a transmission issue more than a generation
issue. Exactly.
Amazing. That's simply amazing. Yes.
So I think China is probably slightly better off. But I mean, I think, when we started this conversation, we talked about how, the energy out of the Middle East disproportionately impacts Asia. So I think something
Absolutely.
we need to watch out for.
Thilan, you are an expert on equity research. And what classes of stocks have taken the worst beating these past few weeks?
Anything that's fuel intensive, anything that's demand sensitive has seen significant beating. So we've seen sectors like airlines, which are beholden to jet fuel, and also demand collapse because of how some of these major hubs have shut down. Transportation and logistics have seen quite a bit of hit as well. Chemical and petrochemical, so the downstream sectors of oil, because of the feedstock uncertainty, they have seen quite a bit of hit. And again, manufacturing as well. Anything that has very high energy intensity has seen a bit of a hit, and automotive, except for maybe the EV sector, has seen some impact. And also consumer discretionary. I think people are getting worried about spending on anything that is not necessary. So, and we are still probably at the early stages of that. So that's something to watch out for. Tourism. I think that's been
I noticed, though, that Singapore Airlines and DBS have not been hurt as much as I thought they might be.
Yeah.
Is there any reason why SIA has done so well?
So I think
relatively well. Actually.
Relatively well. So I think SIA is benefiting from the fact that the Middle Eastern super carriers cannot function, right? So some of that capacity that has been taken off the Middle Eastern super carriers have transferred to Singapore. And I think that's also true not just for the passenger side, but also from the logistics and freight side as well. And I think DBS, and not just DBS, but I think in relatively all three Singapore banks have benefited. We've just seen OCBC cross the $100 billion market cap mark as well. So now we have $200 billion companies on SGX. And part of that reason, I think, is a safe haven flow that Singapore offers. I think, post-COVID, we had that emergence of multiple alternative wealth centers and safe haven centers. And Singapore for Asia, especially with China, Hong Kong slowing down, and Dubai for that Middle Eastern for a lot of the Middle Eastern flow. So I think now with a bit of certainty being taken out of the Dubai financial center, I think some of those flows are finding their way to Singapore, as well as a lot of the wealthy around the world are looking to diversify their risks.
Right.
So I think that's benefiting Singapore
right.
as a safe haven.
Right. In your opening statement, you spoke about opportunities existing in a situation like this. Can you expand on what you're trying to say there? Where do you see investors should be looking even in this moment of gloom?
Yeah, I think it's always important that whatever market conditions are, there are always opportunities. It's just it's about rotating capital to the right sectors. So I think investors need to keep that in mind. And I think these are lessons that you can quite easily see over the last 5, 6 to 10 years, right? One thing is market cycles are getting shorter and shorter, so you have to be a lot more nimble. But I think there are opportunities. So I think in terms of some of the sectors that I think will fare best will be anything that has to do with energy production, commodities, geopolitical spending. So oil and gas producers, I think they're back. Especially the upstream players are, they're coming back again. This was a sector that people weren't touching before, but I think what's become very clear is that energy security is becoming a primary objective for a lot of countries. Oil field services, so anything that supports that oil and gas industry, energy trading and commodities firms, I think will also benefit. Suddenly we have a lot more activity and volatility in the commodities complex. Shipping, I think anything that's not stuck in the Straits of Hormuz is benefiting. Even again, some of those other sectors that were considered no-go areas like coal, I think are coming back
right.
in fashion, and renewable energy. So I think one thing that has become very clear, despite some of the narratives that have been in place in the past, is that renewable energy, A, gives you energy independence, and it is probably one of the cheapest sources of energy that is out there. So I think countries are going to start spending a lot more on renewables as part of their energy strategies. And then defense and military.
Of course, defense.
I think every country today is going to be thinking about, increasing spending.
Right.
And I think a lot of countries have also realized that how quickly your ammunition inventories
Can run
deplete.
down.
So I think globally,
Yeah.
you're going to see a lot more defense. And then I think commodity exporters,
Right.
metals, mining, I think a lot
Right.
of those
So,
sectors.
Thilan, at some point, this war has to end. And I'm sure there'll be a moment of euphoria at that point. Stocks will bounce up. But even after the bounce, there will be new realities about the world. What would those realities be that people have to watch out for?
Yeah, so I think some things have fundamentally changed. I think the sort of last 20 years of low inflation, high growth, low unemployment reality where you have a rules-based system. I think that has very quickly every year it becomes clearer and clearer that that reality is over. So I think in terms of investing, I think you're going to see a few key realities. One is, as I said, more renewables. I think the world is going to go towards building more and more wind, solar, and very specifically also nuclear is becoming less of a dirty word.
Right.
So you're going to see a lot more investments in these sectors.
Yes, a revival, actually.
A revival of that.
It was actually strange to me that the Middle East, which we all thought is soaked in oil, has one of the most active, nuclear energy programs going. So many countries are into it.
There you go. And I think the nuclear technologies are becoming safer and much more smaller as well, so that you can deploy them faster. So I think renewable energies, but I think also oil and gas
Right.
is going to make a comeback, because I think it is still a lot of the global supply chains run on oil and gas, and I think the dependence on a single source or a few sources is not going to be enough. So I think there's going to be fragmentation there and a lot more investments going there. And the third one is food security, and I think more and more countries and companies will look for a lot more certainty in terms of sourcing, certainty in terms of storage, and individual independent security. So I think there's going to be a lot more investments going there. And we talked about defense, and I think we're going to see significantly a lot more defense. And then I think finally, it's going to be a lot more localized infrastructure on supply chains. And I think, the vast global supply chains are going to be a lot more localized, which is more expensive.
Right.
But I think most companies and most countries will take on that cost, because I think they will look for...
Essentially what you're saying is going to be a burst in home shoring.
Exactly. I think that's the best way to put it.
Right.
So you're going to see, and I think, countries in Asia, particularly Southeast Asia, India, will actually benefit from this. I mean, the fact that 1 in 4 iPhones are now made in India versus nothing a few years ago shows how quickly these supply chains can shift. And I think, you're going to see more of that. And I think those old held ideas of you cannot move, you need to have massive scale and massive infrastructure to have, to show supply chains is not really true anymore. So I think there's going to be a lot more investments there as well.
Wonderful. One more question, from the point of view of the investor. What long-term lesson should he take away from this crisis, about blending the portfolios, and is it wise to be not too long on stocks? Is that any insights you want to just offer ordinary investors?
I think, I think any good portfolio that is looking for growth should remain long on equities. I think it's a matter of finding those right companies that offer value and are linked to the new global themes. So I think that no investment portfolio should be short equities. I think longer term we have seen through multiple crises how equities have come through and have delivered. So I think that story will remain.
I see.
So I think equities will remain a key cornerstone of any portfolio.
Right.
Now, one area where we probably need to relook at or revisit is actually fixed income in a certain way.
Fixed income as in debt.
Debt,
Yeah.
because you're going to have much higher interest rates for longer, which means that your capital appreciation of your fixed income will be lower. So maybe that's an area where you need to kind of relook at what your investment objectives are. And I think you also need to have allocation. And I know if you look at the last few weeks, it may not seem the case. Is have an allocation in gold.
Although gold has come off a little.
Exactly, gold has come off. And I think part of that is because there's expectation interest rates are high. So, and normally when you have the US dollar appreciating, gold depreciates. But I think on a longer term basis, I think the US dollar debasement will continue.
I see.
And it's not just a tactical hedge anymore, gold. Central banks around the world are buying 1,000 tons of gold a year. So that's, and I think that's structural. After Western politicians and not Western courts froze Russia's US dollar reserves, no serious central bank is going to believe that in a crisis they'll be able to just cash out their US dollar treasuries. So I think there is a new use for gold, and I think that will continue as well. So I think,
and that's going to come at the cost of the greenback.
That's going to come at on the longer term basis.
I see.
And I think that dollar debasement, I think it will continue given the US's debt commitments, and if it continues to, they've asked for trillions of dollars of additional money to prosecute the Iranian war. All of that is going to drive, some of that debasement. So yes, I think you need to be in equities, but I think you also need to have some gold, and I think you also need to have some debt as well.
Right. Thilan, I want to close with one question about the U.S. economy. Recent data seems to suggest that it's certainly not doing too badly, with the war and everything else. What could be the implications of that for Asia, a stronger U.S. economy? I know that the U.S. market is not that important today for Asia as it used to be 10 years ago. But even so, it's still the biggest economy in the world.
Yeah.
And in the first place, are you seeing a bounce for the U.S. economy because of the war? And secondly, what does that mean for us in Asia?
Yeah, I think U.S. exceptionalism is not dead. I think it's still there. And I think,
So the dollar may come off a bit, but U.S. exceptionalism will survive a little bit.
I think it'll survive a little. They've got energy independence. So they've got the net export effect. When you have high oil prices, it actually helps their energy companies, and that actually drives jobs and so on. They've got a very diversified economy of services, tech, and in terms of frontier technologies, I think the US still leads the world. And it's got a very strong consumer base as well. So I think all of that, plus I think the US has demonstrated that it does have policies flexibility. The Fed does come in quite creatively and quite decisively when it needs to. So I think the US exceptionalism will remain for a certain period of time. Now, what does that mean for Asia? I think Asia is not homogeneous. So I think it'll depend on which Asian country you talk about. So I think countries which are very import reliant, which don't have very strong policies, and the investment community does not have confidence in terms of policy certainty in some of these countries. Plus you've got large deficits and so on, will not do as well. I think countries which have strong policy certainty, have large export bases, and or safe haven sort of destinations, I think will do quite all right.
How many of those descriptions fit particular countries that you can think of?
So, I mean, I think Singapore will continue to benefit. I think if there's one Asian country that is benefiting from a lot of these uncertainties, at least from an investment standpoint, I think Singapore is a clear beneficiary. I think China will, over the long term, will continue to benefit as well, despite what happens in the US. Some of the more commodity-heavy countries or will also do relatively well. I think some of the more frontier market, more emerging market based countries which don't have that same policy certainty will be a little bit more impacted.
Thilan Wickramasinghe, it's been such a fascinating conversation, and thank you for coming on Asian Insider.
Thanks for having me on, Ravi.
And that's a wrap for Asian Insider. I'm Ravi Velloor. Don't forget to share this podcast with your friends and family. And if you'd like to read my articles, we have links in our podcast show notes below. You can also sign up for our Asian Insider newsletter. This episode was produced and edited by Faiza Saini. Thank you for joining us.